Howdy, everybody. Welcome to the Liberty Call. Today is Monday, June 23rd, 2025. Hope you're having a fantastical day out there in the interwebs. Really nice day here in Colorado. It was hot over the weekend, but today it has cooled off. It is, I think the highs today were in the 60s or low 70s. So a little reprieve from summer for a couple days, and we might get a little rain. So hope you had a good weekend. My Astros played pretty good, took 2 or 3 from the Angels and had a good road trip. So all things good there. All right. Well, markets kicked off the week in the green as Fed Vice Chair Michelle Bowman opened the door to possible rate cuts. Tesla surged nearly 10% after debuting its long-awaited self-driving taxi fleet in Austin. Meanwhile, oil prices tumbled over 6% as Iran's muted retaliation eased supply fears. But with key inflation and GDP data on deck and Powell testifying, investors are not exhaling just quite yet. So before we break all the news down, I need some help from you. If you could do me a favor, give me some thumbs up, a like, share, subscribe, and follow, and press the notification bell. All right, well, let's get to the markets for today. Starting out with the Dow Jones, up 0.89%, 374 points. Nice day there. Closed at 42,581. S&P 500 up 0.94%, 55 points. Closed at 60.23. NASDAQ up 0.94%. 183 points, closed at 19,630. The VIX was down 3.35% today. It's at 1993. Canada up 0.42. Brazil down 0.62. And Mexico down a third. Headed over to Europe, Germany also down 0.33. The UK down 0.19. France down 0.69. In the Netherlands, up 0.91. Spain down 0.08. Italy down 1% flat, or 1% even. Switzerland down a tenth and Portugal down 0.47. Russian exchanges in the green today. The MOEX up 0.32, RTSI up 0.59. And the overnight markets in Nikkei in Japan was down 0.13, Australia down 0.36, New Zealand down 0.51. In China, the Shanghai was up 0.65, Shenzhen Component up 0.43, China A50 up 0.32, DJ Shanghai up 0.62, Hang Seng up 0.67, and the Taiwan weighted when it closed on the 20th was up 0.19. Right, good stuff there. Let's jump over to the weekly economic update, and we'll run through that. All right, stocks were mixed during the holiday shortened trading week as uncertainty over conflict in the Middle East weighed on investors. The S&P 500 slipped 0.15%, while the NASDAQ rose 0.21%. The Dow was flat, up 0.02%, and overseas markets declined by 1.54%. Stocks rise and slump. Stocks open higher and oil prices fell at the start of the week as investors hoped Middle East tensions would ease. However, as investors parsed through updates on the conflict, stocks fell over ongoing uncertainty. Conflicting statements from those involved, as well as from world leaders, contributed to the uncertainty. Midweek stocks rallied ahead of the Fed's interest rate decision. Markets seemed to dismiss the news that housing starts dropped unexpectedly to their lowest level in 5 years. The Fed held short-term rates steady. Stocks moved up and down during the Fed chair's press conference before ending the trading session slightly down ahead of Thursday's stock market holiday. Following the holiday, anxious investors refocused on geopolitical tensions and developments. As the week closed out, investors appeared to take a risk-off approach heading into the weekend. All right, Fed holds rates steady. As expected, the Federal Reserve kept the Fed funds rate at its target of 4.25% to 4.5%. However, the central bank did suggest it may adjust rates later this year, and policymakers expressed concerns about inflation and the outlook for GDP. Following the decision, Fed Chair Powell said policymakers are, quote, well positioned to wait, end quote, before moving on short-term rates. Powell indicated that trade policy has clouded the inflation outlook, making policymakers concerned about consumer prices. All right. Not done. All righty. Key economic data this week. Monday, we have manufacturing and services PMI and existing home sales, which we'll go over in a little bit. Tuesday, the S&P Case-Shiller Home Price Index. Cleveland Fed President Beth Hammack is speaking. Also, consumer confidence. Fed Chair Powell testifies to the House Financial Services Committee. Wednesday's new home sales. Thursday, GDP, retail and wholesale inventories, trade balance, durable goods, and Cleveland Fed President Beth Hammack is speaking, and pending home sales. Friday, the personal consumption and expenditures index and consumer sentiment. Just a few companies reporting earnings this week. Tuesday, FedEx. Wednesday, Micron Technology and Paychex. Thursday is Nike. All right, good stuff. Let's jump into the market recap. U.S. stocks rise as Iran launches muted counterattack and Fed rate comments. All right. U.S. stocks rose on Monday despite heightened geopolitical tensions, as well as markets digested Iran's response to U.S. strikes on 3 Iranian nuclear sites over the weekend and dovish commentary from the Federal Reserve. Tehran launched missile attacks on a U.S. airbase in Qatar, reportedly giving advance notice to minimize casualties. How nice. No deaths were reported, though the U.S. military base in the region remains on high alert. Iranian media also reported that Tehran is considering blocking the Strait of Hormuz, a crucial global oil and gas shipping route. Despite escalating tensions, some analysts argued that the strikes may have removed uncertainty about whether President Trump would order military action against Iran, offering a degree of clarity for markets. Oil prices initially surged on concerns about supply disruptions, but reversed course as fears of a broader conflict eased. Brent crude fell 4.6% to $71.89 a barrel, and West Texas Intermediate declined 5.2% to $69.90. Meanwhile, dovish signals from Federal Reserve Governor Michelle Bowman helped buoy market sentiment. Speaking in Prague, Bowman backed a July rate cut, stating that Trump's sweeping tariffs would likely only have temporary effect on inflation. She said if price gains remain contained, she would support lowering rates at the next Fed meeting to bring policy closer to a neutral setting. Bowman's comments come ahead of key appearances from other Fed officials, including Chair Jerome Powell's two-day congressional testimony starting Tuesday. Powell's maintained a cautious stance on rate cuts, citing uncertainty from Trump's tariff policies. Overall, markets remain volatile as investors weigh the risks of Middle East escalation, inflationary pressures, and the Fed's policy path. All right, good stuff. Let's dive into some data from First Trust, the May existing home sales report from Mr. Bryce Gill. All right, existing home sales posted a modest increase in May, but remain sluggish compared to pre-pandemic levels. Sales have struggled to maintain momentum since 2022, consistently hitting a ceiling near 4.3 million units annually. This is well below the roughly 5.25 million annual pace before COVID and far off from the 6.5 million during the pandemic boom. Affordability remains a significant hurdle, with the Federal Reserve yet to cut rates. 30-year mortgage rates hover around 7%, making home ownership more expensive. Median existing home prices are up 1.3% from a year ago, contributing to the affordability crunch. Well, and then all the illegal aliens living in the country. The housing market has bifurcated, with higher-end homes, 750,000 to $1 million, seeing a small 1% sales gain over the past year, while lower price segments continue to struggle. Inflation and high mortgage rates have priced many buyers out of the market, particularly in low price brackets. Existing home sales also face competition from new home sales, where builders are buying down mortgage rates to attract buyers and clear inventory. Many existing homeowners remain locked into low rate mortgages from pre-2022, reducing supply and limiting sales. That said, inventory levels have improved, rising 20.3% over the past year. The month's supply of homes reached 4.6 in May, an improvement, though still below the 5.0 level. That signals a balanced market. Despite weak sales, tight inventory has kept prices relatively stable. Meanwhile, the Philadelphia Fed Manufacturing Index remained weak at -4 in June, signaling ongoing softness in the broader economy. All right, awesome stuff. And one last article to go over, the Monday Morning Outlook from Mr. Brian Westbury at First Trust. This week's article is titled Mirror Image, Quarters, and Iran. So let's see what he had to say. All right. The U.S. first half of 2025 has been marked by contradictory signals, making it difficult to determine a clear trend. In Q1, real GDP declined at a 0.2% annual rate, prompting political criticism. However, industrial production expanded at 4.5% rate, the fastest since 2021, suggesting that the GDP dip was more about front-running Trump's Liberation Day tariffs than genuine economic weakness. In Q2, the situation appears reversed. The Atlanta Fed's GDP Now model predicts 3.4% real GDP growth, though some believe it could exceed 5% as the trade deficit normalizes following the Q1 import surge. Despite the strong headlines, GDP production underlying data like industrial production and retail sales paint a less optimistic picture. Industrial production is tracking at just 1% of growth in Q2, and core manufacturing, including autos, is nearly flat. Inflation-adjusted retail sales are down 1.2% since late 2024. Core GDP, excluding trade, inventories, and government spending, is growing at its slowest pace since 2022, reinforcing concerns about recession risks. Meanwhile, inflation has cooled, but future year-over-year comparisons will be misleading due to weak data from 2024. Analysts urge focusing on current 3 and 6 month trends rather than annual rates. The Federal Reserve remains wary of Trump's tariffs, with Chair Powell still framing them as inflationary despite mixed evidence. Consequently, no rate cuts are expected until September. However, a tight monetary policy slowing both inflation and the broader economy cuts appear inevitable. Geopolitical tensions, particularly U.S. strikes on Iranian nuclear sites, add uncertainty. While Iran may threaten the Strait of Hormuz, its allies, including China, have a vested interest in stable oil markets. The real economic risk lies in potential U.S. military escalation, which could disrupt policy priorities like extending Trump's 2017 tax cuts. All right. Well, that was everything that I wanted to ramble on about today. Did you find it entertaining? I know I did. All right. Well, if anyone needs anything from this guy, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a jingle. I'd be glad to help. I hope everyone out there has a wonderful evening, and I hope you enjoyed today's broadcast. I'll be back tomorrow, hopefully, and I'll talk to everyone then. Adios.